Welcome to our first session on market structures. Today, we will be covering the three key phases of the market: bullish, bearish, and consolidation. First, let's talk about the bullish market. In a bullish market, we see an uptrend where prices are consistently making higher highs and higher lows. Next, we have the bearish market. Here, the market is in a downtrend, with prices forming lower highs and lower lows. Finally, we have the consolidation phase. In this phase, the market moves sideways, and prices tend to stay within a defined range without a clear upward or downward trend. Now we're going to discuss market structures and how they can help you understand market trends. First, let's talk about an uptrend. In an uptrend, we see a pattern of higher highs and higher lows. This means that each successive high is higher than the previous high, and each low is also higher than the previous low. This indicates a strong bullish market. Here's what it looks like: higher high, higher low, higher high, higher low. Next, let's discuss a downtrend. In a downtrend, the pattern is the opposite: lower lows and lower highs. Each high is lower than the previous high, and each low is lower than the previous low. This signifies a bearish market. The pattern looks like this: lower low, lower high, lower low, lower high. Now, what about a consolidation market? In a consolidation phase, the market moves sideways, and we are not making significant new highs or lows. This means that the price is trading within a range, and the market is neither bullish nor bearish. During this phase, institutions might be accumulating positions, preparing for the next big move. To summarize, you should concentrate on understanding these three market structures. 1. Uptrend, higher highs and higher lows. 2. Downtrend, lower lows and lower highs. 3. Consolidation. Let's start with the monthly and weekly time frames. These are our largest time frames and provide us with a broad view of the market's direction. Notice how the market is making higher highs and higher lows. We'll highlight these highs and lows with yellow color. This pattern indicates a bullish market, as the price is consistently moving upwards. However, it's important to remember that different time frames can show different trends. Now, let's zoom in on the daily time frame. We'll mark a specific section from our monthly-weekly chart to see how it looks on a daily scale. In the daily time frame, we might see a downside movement, which appears as a bearish trend. Here, the price is making lower highs and lower lows. Let's mark these highs and lows with blue color. Despite the overall bullish trend in the monthly and weekly time frames, the daily time frame shows a bearish trend. This means that while our long-term outlook is bullish, we can still find opportunities for short positions in the daily time frame. Now, by focusing on the move I've encircled here on the monthly and weekly time frames, as you can see, there's a clear move to the upside. This suggests a bullish trend is forming. Now, when we look into the daily time frame, we can observe that the market is showing higher highs and higher lows. This pattern confirms that we are in a bullish trend on the daily chart as well. While on the daily chart, we can see multiple higher highs and higher lows, indicating a strong bullish trend. The weekly chart shows a more subtle move. There, we might only see one or two candles moving to the upside. Now let's talk about how to find the highs and lows on a 4-hour chart when the daily trend is going up. Look at the diagram. When the daily trend is bullish, we see many highs and lows on the 4-hour chart. These points are important to understand how the market moves in this time frame. We can find these points easily by also looking at daily and weekly or monthly charts. The 4-hour chart might look different. I've marked the highs and lows with purple. It might seem complicated, but it actually makes it easier. Seeing these highs and lows helps us find the real swing points. In the market, there are big structures with smaller structures inside them. It's important to understand these layers. In the next video, I'll show you examples with charts to make it clearer. For now, just look at how I marked the highs and lows in these diagrams. It's important to know the market structure before we learn the rest of the strategy. This video is only about finding the market structure. We're not talking about how to buy or sell yet. Remember, knowing the market structure is the most important part of this course. Once you get it, we'll add it to our full strategy. That's it for this video. Stay tuned for the next one, where we will use chart examples. Thanks for watching.